Hey, Courtney Smith here, and I want to talk today about why does momentum investing work? How could it possibly work? People have known for literally decades that this technique makes money. So why is it that it still makes money? Why haven't people been able to trade it out of existence? Usually the market is very efficient. When people perceive a good idea in the marketplace that's worked over the past, then all of a sudden, when everybody knows about it, that idea stops working. But in this case, momentum investing has been working as long as the stock market or any market has been in existence. So how is that possible, and why does that work? Let me tell you why I think that's the case. Let me draw a little picture over here. Let's use the stock market as an example. The stock market, the company's prospects, the earnings may be growing faster and faster and faster, and they're going up and up and up. And what happens is that people, analysts, investors, don't really perceive that the company is doing as well as it really is. So what happens is people's perceptions lag behind the reality of what's going on. So they're back here even though the company is doing much better. So the company's doing this much business over in this area, but people's perceptions lag and they're down here at a much lower level. And that's really what the main issue is here, is that people's perceptions do not keep up with reality. They start to think things like, well, earnings are $1 a share for this quarter. Last quarter they were 80 cents, so well, I don't really think they can grow up to 120, so I'm going to predict 110. Well, of course, the company then comes in with 130 because the percentage gain is going to be the same as before, but the perceptions of people are behind the times. Now, one of the ways that we can follow this is by looking at earnings surprises. I'm going to talk more about this and how to utilize momentum investing as a profit-making strategy in a future video. But the key thing is to recognize that people are lagging. They don't understand what's really going on with the company. One of the things you can do, of course, is look at insider trading. Are the insiders buying or selling? If they're buying strongly, that's a good idea that the momentum of the fundamentals is going to continue to work. The other thing is that a lot of people prefer to do things like buying dips and selling rallies. So as long as there are people who are willing to sell rallies, then momentum investing will continue to work. Because if the fundamentals remain bullish, then the price is going to go up. Once again, taking a look at this picture here, if the prices go up and they go down and they go up and then they go down and so on and so forth. Well, if the market is moving up and it reaches a point, and it's going up because the fundamentals of the stock or the commodity or whatever are bullish, at some point people will come in and they will sell the market either by taking profits on an existing long position or through actually short selling. Well, if the fundamentals are better than what people think they are, then the price may go down for a short period of time, but then eventually the fundamentals will start to go up. And of course, as soon as the fundamentals start to go up, then the people who short sold it have to buy back their position and thus create additional bullish pressure. So basically what's happening is there's a feedback mechanism that's going on. The fundamentals are more bullish than the market perceives it. As a result, you get additional short selling or long selling. In other words, people selling their existing long positions, and then they have to cover those short positions later when the now clear extra bullish fundamentals apply. So there's a feedback mechanism going on there as well. Anyway, in future videos in this momentum investing series, I'm going to talk about specific techniques that you can utilize to make money using momentum investing. Thanks very much.